This video will help you understand the Washington State estate tax so you can avoid it. If you don't know who I am, my name is Chris Dime. I'm a certified financial planner out of Edmonds, Washington, and I specialize in working with folks to and through retirement. As it pertains to estate planning in general, most individuals will not get hit by federal level estate taxes. And that's because the exemption levels today are $12.9 million per person. That basically means you have to die with more than $12.9 million to your name before you have to worry about paying federal estate taxes. On the other hand, a lot of states will impose their own state level estate tax exemptions, and those levels are far lower, which just means with lower exemption levels means more people are going to get impacted by state level estate taxes. One state in particular that has a state level estate tax, along with some other nuances, is Washington State. Now, rest assured, if your goal is to leave all your estate behind to the Washington State Department of Revenue, you can totally just skip ahead to the end of this video. However, if you'd prefer to have more of your estate left over for loved ones and causes you care about, in this video, we'll break down the Washington State estate tax so you can maximize the exemption that you're permitted and minimize the impact of estate taxes if you die with more than $2.2 million. So let's jump in. So for a quick refresher on estate taxes, when you die, your estate is going to be worth X amount. Theoretically, if you've titled everything appropriately, a married couple can split the estate down the middle and say, my half is worth X and my spouse's half is also worth X. Then estate taxes are only levied on the amounts that exceed particular exemptions. So on the federal level of $12.9 million today, anything above and beyond $12.9 million, if you don't plan ahead of time, could be assessed somewhere in the ballpark at 18 to 40% in taxes. So for example, a single individual who dies with $20 million to their name will have the first $12.9 million exempt from federal estate taxes. However, the remaining $7.1 million will be assessed federal level estate taxes, and that'll cost them to the tune of about $2.8 million in taxes. Now, if someone's married and they pass away, they have a few extra estate planning options at their disposal. The first and most common one is the unlimited marital deduction. What that means is even if I die with my share of the estate being worth $1 billion, I can give all of it, an unlimited amount, I can give it all to my spouse and therefore bypass paying any federal level estate taxes. Now, eventually when my spouse passes away, she will be assessed federal level estate taxes on her estate, and based on whatever the exemptions are when she passes away, she may or may not owe any sort of estate taxes. The other strategy that's afforded from an estate planning standpoint is portability. And that's where I'm allowed to take my $12.9 million exemption and port it over to my spouse if I haven't used it all. And this is called moving the DSUE, or the deceased spouse's unused exemption. Theoretically, what that means is if I don't touch any of my $12.9 million exemption, my wife is allowed to combine her 12.9 with the 12.9 I gave her when I died, and then when she eventually passes away, she'll be able to combine both 12.9 millions for a total estate exemption of $25.8 million. Then only assets that exceed $25.8 million in her estate would then be assessed federal level estate taxes. So that's how things work on the federal level. Let's touch on states. So of all 50 states, 13 of them have a state level estate tax. And I'll link below so that you can see if your state is one of them. And if so, it's going to behoove you to look into some of the nuance behind their legislation. And of course, their exemption levels, because they're all different. In Washington State, for example, your state level exemption is $2.2 million. Anything above and beyond $2.2 million is going to be assessed estate taxes in the ballpark at 10 to 20%. And for those of you doing math ahead of time, yes, that does mean if you die in Washington State with a big estate, you could absolutely face state and federal level estate taxes. So in addition to Washington State having a much lower individual exemption amount, they also don't permit the ability to port over any unused exemption. That means that if I die with a $2.2 million exemption and I don't use it, I can't give it to my spouse and have her double up on the exemptions. I either use my $2.2 million at my death or I lose it completely. So now let's fast forward and say, okay, I am approaching my $2.2 million individual exemption, or I'm doing some financial planning and I forecast I will be at some point in the future. What can I do to maximize my exemption so that I use it and minimize the impact of excess estate taxes? Well, of course, we already touched on the unlimited marital deduction. So, of course, when you die, Washington State will still honor that. If you decide to just give your spouse everything, you'll completely bypass Washington State estate taxes. But if you're single and or you just don't want to do that, there's some other ways in which you can minimize the impact of state level estate taxes. So one of those is going to be through ultimately just trying to reduce your estate well ahead of time. The classic advice here is not to burn all your money, but rather to give money away strategically many years ahead of when you forecast passing away. The classic advice here is to look at the gift exclusion amount, which basically means you're allowed to give up to this limit to anybody every year for the rest of your life without ever having it impact your federal level individual exemption. So for 2023, that number is $17,000. Basically just means I can give $17,000 to each one of all my friends every single year until the day that I die. And that won't hurt my federal level exemption. Of course, my spouse could do the same. So theoretically, us as a household could give away $34,000 to every single one of our friends and every single one of our friends' spouses and all their kids, and we could rapidly reduce our estate if we wanted to ahead of time. And again, that wouldn't impact our federal individual exemption. This is also where the concept of setting up things like irrevocable life insurance trusts come in, or ILITs. We'll have to touch on those another time, but to keep it simple, those are just more complicated ways of using the gift exclusion every year towards something that will kind of do more financial impact than just giving people money. One cool thing about the Washington state estate tax, however, is as opposed to the federal level, where if you give more than $17,000 to a particular person, whatever dollar amount was in excess of that annual gift exclusion, that will have a dollar for dollar offset of your $12.9 million exemption. However, in Washington state, that doesn't exist. So if you forecast yourself being between 2.2 million and 12.9 million in an estate value, you could theoretically give your entire estate away before you die and theoretically won't face any Washington state estate taxes. Now, if you forecast yourself being subject to both state and federal levels, don't do that. But if you think you're just going to be subject to the Washington state estate tax, that could be a strategy to very quickly reduce your estate ahead of death. The other strategy that exists for maximizing your unportable exemption, if you will, because remember, if I don't use my $2.2 million Washington state exemption, I can't give it to my spouse. It's use it or lose it. One way to ensure that I actually use my exemption when I die is to ensure that I've instructed my estate to set up what's called a bypass trust. I'll link above to a video I did on bypass trust for a little bit more nuance, but the long and short of it is at my death, 2.2 million is sucked out of my half of the estate and it goes into a trust that has now bypassed state level estate taxes, and it will eventually go to beneficiaries I've chosen ahead of time when my wife eventually passes away. Until her death, however, she's still able to access income from that trust if she needs it through the HEMS provision, or Health, Education, Maintenance, and Support provision. So while the 2.2 million has bypassed any sort of state level estate taxes, I've used my $2.2 million exemption and removed that money out of my estate. My wife could still access it if she needs to. And then when she passes away, that 2.2 million or whatever it's grown to by that time won't be included in her estate for state or federal level estate taxes. Now, of course, when I die, anything above and beyond that $2.2 million exemption that went into the bypass trust, anything above that, I could just give to my spouse via the unlimited marital deduction and still bypass paying any Washington state estate taxes. So those are just a couple of things to think about if you are in Washington state and you forecast being at the $2.2 million or above mark. A few calls to action would be forecast where your estate will end up in the next few years. I'm hesitant to say run it out 40 years because the math usually looks phenomenal in estate planning software as long as you're not running a cash flow deficit. And estate taxes and estate exemptions are all subject to change over the next 20 years. So I really wouldn't put too much grain of salt there. I would say if over the next decade you think you're going to be reaching these particular levels, I'd absolutely advise doing some planning ahead of time. And you can speak with your financial planner. You're probably going to want to eventually speak with an estate planning attorney to actually draft some of these documents if you want to get some of this stuff set up ahead of time. But hopefully this was helpful in breaking down Washington State's estate tax. If you have further questions, drop them in the comments below or get in touch on the website. We'll get you squared away. Have an awesome rest of your week. Talk to you later. Bye.